Hello, ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Star, and today we have esteemed guest Dr. Milan Sombrok. Welcome to the show.
Thank you for inviting me. I hope I can say something useful.
We all hope, not just you. And founder of the network, the three times Florida chess champion, Nick Paliveda. Welcome to the show.
Oh, Sasha, I guarantee I'll say things that are useful for this show. Guarantee it.
We all pray for it just as well. First of all, what's happening in the market? Today it's a green day. However, the recession hasn't started yet. The correction hasn't finished yet. However, the market was oversold, at least short term. So we have a bounce, which is quite predictable. But I would recommend, and that's what I'm doing, no long positions whatsoever. You can do a little swing trade for, let's say, 2, maybe 3 days. 3 days, not so sure. 2 days, quite possible. And even that, you have to be very cautious. I'll describe you, for example, trades, what I did today. Now, I'm not recommending this trade to anybody. It's just what I did. And the only person who can prevent me from doing this trade, only my wife, and not always. So, for example, let's come back to old trusted NVIDIA. NVIDIA went down big time lately. It's bouncing nicely back. So what I did, first of all, I bought 500 shares to be on the safe side. Because if market will continue to perform, I can buy another 500, but let's start with 5. I sold at the same time covered calls. Covered calls I sold, I'll tell you which one, March 14th, which is this Friday, 116 calls. Now, then NVIDIA retracted. It went downward a little bit. So I I bought these calls back for a net profit of $600. And then I sold now to be overly protective using this profit from calls that I've just made. I sold the March 21st, which is next Friday, 110 calls, generating a net of $7 for each call. So 5 calls, you're talking about $3,500. And that is, although now because NVIDIA keeps moving higher, now I'm taking a little bit of loss on this covered calls, but it's offset by previous position, which I generated profit of $600. So I'm about even on the calls, and I'm showing a nice profit on NVIDIA shares. But we'll see how it plays. Then I cashed out on short-term positions. I had some, believe it or not, it's the first time ever that I bought Tesla. It's beaten up stock. It will go much lower soon, but on a bounce, it's pretty good because it's quite volatile. It allowed me to make a very quick profit of $3,300. I cashed out from Tesla. And what else? Hood, which is another kind of story. I did a small little trade in and out, generated $300 profit. And just watching the market, everything is moving okay for now. Actually, today is a very important day from the market perspective. If today market will not be able to hold on to its gains and it will break even or even going lower, that means that the next downturn is in cards. And how severe it will be, we don't know. Overall direction of the market is lower. On a bounce, you can still make few trades, make a little bit of money, and keep your powder dry. Just you have to be in a game in order to make any money. You have to be in a game. If you're not in the game, you're not making any money. Now, what's another interesting phenomena is if you compare Bitcoin to gold. As you know, gold is making new highs. It's about to break 3,000 anytime, maybe even as we speak. And if it will break 3,000, the next goal is 5,000. Why gold is doing so well, unlike Bitcoin, which is going lower and lower? There are several reasons for that. First of all, Bitcoin was lately, although even 2, 3 years ago, people were um, uncertain to what's the relationship of Bitcoin to any other assets. And in the last something years, it came obvious that actually it does move in parallel with the stocks, especially in Nasdaq, especially the Magnificent Seven and all that stocks. There is a very clear correlation in the direction of Bitcoin. So now, if market breaks, and it broke substantially in the last few weeks, guess what? The Bitcoin also went much lower. And now it still has support level between $73,000 and $75,000. And it will break that level. And it will, because if stock market will continue, especially Nasdaq will continue lower, then there is no support anymore. If it will break down from 73, there's no support. But I'll tell you, you know what support, next support? $20,000, believe it or not. That will keep Bitcoin in a free fall. The resistance is at its previous high of about 110,000, slightly less, 108. But we are moving far away, and every day we are moving farther away from that resistance level. So you might as well forget about resistance level, watch support. 73,000 is a very important number. Gold, on the other hand, it has no resistance anymore, because 3,000, it's not even a resistance, it's just waiting until it will break through. And you know one of the reasons why? When money are moving away from the market, Nasdaq or S&P, or it doesn't matter what, this money has to go somewhere, except the ultimate losers who lost everything and selling their furniture and so on. The money has to go elsewhere. And where it's going to gold. There is no other safe haven around except gold. So as more money will get out of the market and move into gold, guess what's happened? The gold will go way much higher. It's already moving higher. So I'm not a great predictor. I'm just basing my predictions on what's happening actually in the market. The market tells you with uncertainty of U.S. economy, U.S. dollar, money moving from the stocks, it's all will benefit the gold. And by the way, silver too. Silver, it's a more complicated place because I think that silver miners could move much higher, but the easiest way to do it is gold, although silver potentially can do even better. So this is a market environment, and I would ask you guys what you think and how you navigate this market. Milan, let's start with you.
Well, first of all, we recommend against buying individual stocks. We recommend that people buy the American market as a whole by buying into an exchange-traded fund which tracks the S&P 500. There are about half a dozen of them, but SPY happens to be the best. And so now, concerning gold, for example, all the gold that we need, people who invest like we do, is in the S&P 500. Interestingly about gold, it fluctuates up and down like most investments do, but it can buy the same amount of anything that it bought 5,000 years ago. And so that's useful. But within the fluctuations, some people were able to buy low, sell high. Eric Sprott is an example of a man who became a billionaire doing exactly that and selling the idea to his clients. Assets under management is really what made him wealthy. And his clients recently lost money in a rising market. It takes special talent to lose money in a rising market because a rising market takes up everything, garbage included. So gold, silver, the same thing as silver is we have all the silver we need by holding SPY, which represents the American economy.
Milan, there are a lot of talented people on the market, so don't underestimate them.
Well, there are a lot of talented people in the market, Sasha, it's true, but the average investor does not equal the market because she behaves exactly the way that Wall Street wants them to behave, which is to trade and to trade frequently. Now, David Svensson, who headed the Yale University Endowment, the best performing university endowment on the planet, said that you can't beat the idea of having an asset allocation where 50% of your investments are in the market SPY and the S&P 500, and 50% are in cash or near cash. Wall Street doesn't like you to do that because they don't make anything on the cash that you have. But having a 50-50 asset allocation, and 60-40 also works, and 55-45 also works, and they all work as long as you have a large amount of cash in there, which is what Wall Street doesn't want you to have. Then what happens is when the market drops and you wind up having more cash than SPY, then the market, you use that cash to buy bargains. And when the market rises and you have more SPY than you have cash, you take profits. You sell some of your SPY to return back to your 50-50 asset allocation. That way, you're always buying bargains and you're always taking profits, which is the exact opposite of what most investors do. When bargains abound, investors are running for the doors. When the market is expensive, investors are jumping on board. And that can work temporarily. I think you call that in momentum investing. Trend is more likely to continue than it is to reverse itself. But trend reversal is one of the few certainties in the market. So that's what I have to say about how to invest. Don't own individual stocks. Your prospects of beating a 50-50 asset allocation and maintaining that 50-50 asset allocation, your prospects of beating that by picking individual stocks are close to zero. So if you're having a lot of fun picking individual stocks, great. And also you can beat that arrangement, the asset allocation, temporarily.
I would like to make a small remark before Nick, I will go to you. That it all depends on the trend. For example, because of the rising trend, I was able to make very sizable gains in my fund portfolio on NVIDIA stock. What I was doing, though, is very opposite to what you just recommend, Milan. I would start with small positions, say 1,000 shares. I would buy them. I think I started to buy NVIDIA when it was around $70. And when it was going up to 80, I didn't sell and get my profits out. No, I would buy yet another 1,000 shares now at 80. So now my average price was 75, and I have twice as many shares as I started.
Well, you're doing momentum investing, and it's working for you. Let me ask you this, Sasha. Most NVIDIA investors today have lost money.
I'll tell you one thing. You can lose money in everything, and you're saying most investors are losing money. I would agree with that, but why would they care about most investors? I'm talking about myself only. Maybe my wife, because she's participating in my investments, but that's the only thing what I care about. So when you have a position of 2,000 shares with your average price 75 and stock trading at 80, and it goes now up to 1,000. So then you will add another 2,000 shares of NVIDIA. Now you have 4,000 shares. Your average price is about 85, and stock is trading at 2,000 at 100. So now you are sitting on a sizable gain. Now you can sell maybe covered calls just for a little bit cash and a little bit of a protection of a downturn. But guess what? There is no downturn because stock is continuing exploding. So this is something, and I've made way much more money than somebody investing in S&P for years, for dozens of years. You can invest in S&P dozen of years, 2 dozen of years, and you will not make even a fraction of what I did in 2 years of NVIDIA. My last shares of NVIDIA, I sold at $132 just before its downturn. The reason that I sold was that it was trying to break 150 resistance level. It did it 3 times and it couldn't do it. So for me, it was a signal that further consolidation required, and it could take many weeks, maybe months. Furthermore, the market was about to start quite shaky. So I decided to protect my gains. I already lightened up. I sold some shares at 144. I sold some shares at 138. And my last shares of NVIDIA, I sold at 132. As I said before, I bought some NVIDIA today at 110. I have no regrets about that. It's now 116 or so. And yet I sold protective covered calls and cashed out on some of them, sold more, waiting on how it will play. But in any case, I will make hopefully profit on this trade. That's how you have to treat the market when it's trending higher. You have to be all in, and you'll make in a few months something that other people will never make in years. Now, when it's change of direction, you have to be aware of it. So now I'm trying to accumulate some gold and silver positions and trading some stocks on, for example, like today there is a sort of hopefully we will end up higher. Not so sure about that, but hopefully we will. Nicholas, now back.
Yeah, actually, I was pretty active this week in the market. First of all, I did look at NVIDIA. I'm going to relook at based on what you said, Sasha. I keep shying away from it because the price earnings ratio over 30 just bothers the heck out of me. I did make an acquisition. I bought Ford, and Ford's done really well since I purchased it. A couple reasons. Number one, the dividend was over 6%. Number two, the PE ratio is 6%. And number three, the stock's beaten down. In other words, I have all the metrics, and it's basically a good long-term or short-term hold. So I purchased Ford. I went ahead and bought Intel. Intel was down like 40%, and even Gates doesn't know why. I don't know why either. The dividend isn't that great. It's like 2.75, but it's acceptable. And the thing is, it could run the coattails of NVIDIA going upwards. And also the thing is, they got some government money. So I purchased some Ford and some Intel. I also bought some Micron Technology. Part of it is because I missed the play when it was 64. I was trading for 100, so I went and bought it. And of course, it dropped to 90. Thank you very much. But now it's coming back up to 95. But long-term prospects and the low PE ratios make it a good, solid bet, in my opinion. The low dividend doesn't. But the thing is also, it's a beat down stock. So I think there's a lot of upside in Micron. So I went ahead and bought some Micron. I also added HPE. I've always wanted to buy HPE. It's Hewlett Packard. And I buy their stupid products. And so I go, well, let's see how their stock's doing. Low PE ratio, decent but not great dividend, and long-term prospects are good. Short-term prospects are good because the stock is always beaten down. Notice the theme. I like to buy the stocks that are beaten down because they have a lot of upside, and they did. I also went and bought this week Devon Energy. Now, the Devon Energy, oh, by the way, Micron was a buy on all the analyst websites. They're going crazy over that stock. I don't go crazy over it. I watch the analysts. One thing I know about analysts is that's all they're going to do is watch it and look at it. The other problem with Micron, for people who don't know, the insiders sold some of their stock, and that was not good for Micron. So I'm just going to let you know, when you watch the insiders sell, that's not good. But there's another stock I bought where the insiders purchased, and that was good. Okay, Devon Energy. Devon Energy has a lot of upside, very little downside. So I went ahead and bought that, low PE ratio in a good sector. So I went and did that, and also went and Dino. And Dino is Sinclair Oil, and boy, yeah, there's a lot of upside on Dino. So I went and bought some Dino, and then I reached over to get some Halliburton stock. Now that's kind of an interesting play because Halliburton, of course, was Dick Cheney's stock. for a long time. He was the CEO of Halliburton, but again, good metrics. So I went and did that. And then here's the stock that the insiders started buying, and I went ahead and bought it too. Looks like it has good P ratios, good long-term and short-term prospects. That's Moderna. Why long-term? It's the mRNA vaccines that they're coming out with. And so they have a lot of potential upside, very little downside, and they're not reliant on the COVID-19, which Pfizer, and I looked at Pfizer and Merck, they're all supported by that. And of course, and they're supported by certain drugs. But Moderna looks like has a long-term prospect with mRNA vaccines and also insider purchases, which I think is very important if you're going to analyze individual issues. You've got to look at a lot of different metrics. You've got to look at the price earnings ratio, you've got to look at the revenue, you've got to look at the long-term stream, and you've got to look at what the insiders are doing. Unfortunately, the reason why the average investor, I believe, produces average results is they do average analysis. It's just like chess players. The average chess player is not a chess master. The average chess player is like a 1,500 player maybe, and it's hard for them to get to 1,600. But the thing is, there's a group of people that are not average. It's just like I like playing the Sicilian Najdorf because it's all complicated. But other people like the French defense. There's nothing wrong with the French defense. By the way, there's nothing wrong with the S&P position you're doing. It's just not. It's like, to me, it's the French defense. There's nothing wrong with it. It's just I like the Najdorf. That's all.
Except if you're playing French defense against Fischer, then you would be in trouble.
Well, actually, Fischer had a hard time with Ullman and also several of the other French defense players. So it was not one of his favorite things to go against. Again, it's just a different style. And this all goes back to the individual person. It's also your time horizon. How long do you plan on staying with that particular stock, et cetera? But when you say the S&P 500, that means you've got 500 companies. Are you telling me they're the top 500 of the top 500? All of them are the same in terms of metrics? No.
Let me tell you about
but you have to go find who the top 10% is, and that's a lot of work. So if people don't like, I know people don't like to work that hard. So anyway, go on.
A couple of things. For example, is it not desirable to be able to continue your lifestyle in retirement as you had while working? You don't have to reverse mortgage your house, and you don't have to move in with your kids. You continue your lifestyle in retirement as the one that you had while you were working. And simply buying the S&P 500 will guarantee that, because the S&P 500 has averaged 10% over the last 200 years, not inflation adjusted, 6%, yes, inflation adjusted, and you can live very nicely on 4% of what you have invested. So it's a very simple way for you to continue in retirement the lifestyle that you had while you were working without having to reverse mortgage your house or move in with your kids. So now, talking about chess, you know that you can be a much below average chess player and still have a lot of fun. You don't have to be a grandmaster or an international master. You know, we have a chess club. Sasha joins us. We play once a year in Collingwood, the 3-day weekend, and we have about 80, 90. This year we expect over 100 people. First year we had about 45. That was 4 years ago. This year we expect over 100, the way things are enrolling. And a lot of those people are there because they're having fun. Yeah, we have a few international masters there. Sasha is outstanding. His wife is also, 8-time Canadian champion, chess champion. But without being a great chess player, you can still have a lot of fun playing chess. Without being a great investor, you cannot have a lot of fun while you're losing money. So, equally,
I would argue, Milan, that you have more fun being a regular chess player than you as a chess master. Because a chess master, chess to me isn't a lot of fun. It's a lot of work because I work my butt off to be extremely good. Golf
at your level of chess.
In other words, it's more fun to just go out and play golf because I'm not that good. I never will be good, and that's the way it is. But chess, I'm too demanding on myself. I expect to win all the tournaments I play in. That's pretty hard. So for me, it's a lot of work, and it's after a while, it doesn't become fun. I think in the market, it's the same thing. How much time do you really want to spend with this? Analyzing stocks, and then all your analysis can go down the toilet. Unlike chess, if you analyze things correctly, you're going to win. In stocks, you analyze things correctly, and Trump throws a tariff, and you lose. You're just going like, what did I do wrong? I didn't do anything wrong, except you got hit by the side. So you're right. The safe play is just to go in the S&P 500. But some people like to, put a little skin in the game and see where they can go, and see if you can actually beat the traders out there. The analysts, though, I mean, talk about being overhyped. Kathy Wood at ARK, she moved to St. Petersburg. She's probably don't want to pay the state income tax in California. But you know what her return is? It's like a negative 3.2%. She's got $6 billion under management. Now, who would send money to a person who loses money? I don't know. But all she had to do is get lucky, have a couple good runs, a couple good publicity, get a lot of assets under management. Look how wonderful they are. But in 40 years I've been doing this, I have seen these analysts come and go, and then the scams come and go. The latest is some guy gets on the internet and saying, I'll go join my club and pick 3 stocks and stuff like that. Somewhere along the line, you're going to be paying a fee to listen to somebody, and it's frankly probably a waste of time. They had you guys are old enough to know this person, that there was the Wall Street Money Machine with Wade Cook. If you ever saw this guy, he ran around the country doing seminars, how you can make money in Wall Street, and apparently you could. Everybody but him, and the people took his advice. He sucked, But they don't have ELO ratings for these players, Sasha. In other words, like, if you're a investment guru, you're not given a chess rating to tell you how good you are. So the thing is, you don't know who the heck you're listening to. But I do follow the analysts only because some of them do command assets under management. They can make markets. Okay.
Yeah.
I don't ignore them, and that's the big thing on Micron right now. It's not really the metrics. If you look at it, are probably average. But when you have all the gurus going buy, you start getting these momentum stuff, and you can't stop it. It's going to go up. I will look at the video. I keep looking at passing only because of the P ratios. If you give me a P ratio of like 12, I'd buy.
Yeah. Couple of things, Nick. Couple of things about what you said. First of all, you said a little earlier that you were nervous about the price-earnings ratio of the stock market today, and it happens to be around 29.
Yeah.
The historical average is 18. And so Simon said he didn't know when the market was going to turn. Let me tell you, Goldman Sachs and the Bank of America are predicting a 0% to 1% return for a decade. So that's where it's going to go, for sure. Tomorrow, maybe not tomorrow, maybe not next week. But ultimately,
you're preaching to the choir. I mean, the thing is, one problem with all the acquisitions I did is wait a minute, this could all be in negative territory next year. In other words, I'd be talking to you guys next year and say, why'd you buy all this stuff? It's all down 10%. But this is why everybody has to look at their own individual position. It's not like I don't have a lot of cash to buy more if I need to. See what I mean? So you got to carry your cash reserves so you can withstand the down market. So you've got to look at your own individual position before you jump into this stuff. But I did look at the overall analysis. And of course, I watched your program, watching the S&P 500 being overpriced about 10 points. And that bothers me. The P ratios are high right now. So I'm looking for individual stocks. The P ratios aren't that high. My favorite was Ford to start with. But the thing is, all of them look to be pretty good in terms of dividends if I had to go into a long-term hold position, except the tech stocks aren't really good.
Nick, just really quickly, I had a question for you. One is, I heard that because I think one of my friends, it might even be my brother, has a Ford electric car, because Ford has electric cars, and all along those lines, they're American-made electric cars. They're not all Tesla. They're not all Rivian and some of the other more high-end cars. But I don't know if you saw this, but yesterday in North Carolina, Merck, which is a major pharmaceutical company, bought a $1 billion plant or something like that. So I just wanted your idea as to whether Merck should be looked at, because I know that they are a major pharmaceutical company.
I didn't think Merck's metrics were as good as Moderna. So I actually bought Moderna, and I passed on Merck, I passed on Lilly, and I passed on Pfizer. And I used to have Pfizer. I had it when it was like $30, $40 a share, and I bailed out at 30 or 40. And now I can buy it at like 19, but I still don't think it's a good buy. I mean, even though the price went down, there's the thing that's supporting those companies right now is the weight loss drugs, which is a whole different marketplace. So, I just passed on it. Realize, I mean, that's one of the advantages of being an individual investor, is that you can pass on stuff, and sometimes it's a good pass, sometimes it's not. Like I said, I'm kicking myself. I passed on Micron at 64, and if you held it long enough, obviously you're going to do well. And that's what the other thing is. You got to look at your holding period. How long do you plan to hold that? So like on Intel, if I have to hold it for quite some time, I'm kind of okay with it. Same with Moderna, same with all of them. I keep checking to see if there's anything radically that are changing. The other thing is I tend to stay away from certain sectors because certain sectors can go south on you fast. The analysts will go, buy Kohl's. Kohl's is a retail department store. That whole sector can just go down so fast it's not funny. How about Bloomin'? Bloomin' owns, the Outback Steakhouses.
Mm-hmm.
Well, how did Hooters do recently? I don't know. Hooters filing bankruptcy. You see what I mean?
Who's that other one? Because I think it's Arden that owns Red Lobster and owns Bahama Breeze and owns a number of restaurants. And they
but
up and down.
I've had clients in the restaurant business, and let me tell you, that is one tough sector. So the thing is, some cases it's best just to stay away from certain sectors. The reason why I like the silicon chip sector, the high profit margins, high volume, high demand, you have all the metrics working for you, and you don't have really a high labor costs because a lot of it's done electronically. In the
I got
restaurant,
a question for you and Sasha as well and everything, because there's a sector that looked like it was going to do well, and I was biased to it to some degree because my schoolmate was involved in it and everything, and I think it's still doing well, but I don't think it's doing as well as it used to do, and that's the sector that Cree belongs to, because there was a time that people were very big into LED lights and things along those lines, so those like energy efficiency items. So is energy efficiency items a sector that people should get into? Because Cree was doing well as a business for a while. I don't know how it's doing now as a stock, but I know that it did well there for a minute. So what is your take on that, Sasha? Because I know that Cree was a very popular company for a while.
I'm not a big fan of energy sector because one of the Trump's idea is to lower price of oil down to $30-40 per barrel. I don't know if he will succeed, but if it will move even down to $50 a barrel. Right now it's around 65. There is a lot of downturn is possible in the oil sector. So I just don't touch it because the upside is usually quite limited. I don't see there is a shortage of oil in the world, and so the downside is quite obvious there. Now I want to tell you something. What I described my trades today, they are all done in my so-called fund portfolio. I don't trade my core portfolio. Core portfolio is high yielding dividend stocks, and I don't touch it. I don't trade it. I don't take money out of it except dividends. I'm taking out dividends when I'm about to going on the trip to upgrade to business class, and that's the only reason why I'm taking any money out of core portfolio. But fund portfolio, it's a different story. This is obviously very aggressive portfolio. I wouldn't have fund portfolio if I wouldn't enjoy trading, following up the stocks. I wouldn't do it at all. I would just maybe playing chess. Now, coming to chess, there could be a lot of fun in chess. Yesterday, I played a game in a Greater Toronto Chess League. It's a team championship. And I was playing a kid, and it was about equal position after the opening. But then my advantage was I had control of the one only open line there. And so I took control of that line. And, then I started to chop his pawns, and I had 3 extra pawns. And, the guy wouldn't resign. So I was very upset about it. And I said, okay, I'll teach him a little lesson. So what I did, I started to chop his pawns, and then I advanced my pawn. Then I got a second queen. And then he had to exchange this queen. So now I have an extra queen and 3 or so extra pawns. So of course he doesn't resign yet. So I decided, okay, let's have fun. I still had 7 pawns he had about 3 pounds, and I had extra queen. So what I started to advance all my pawns, and when I advanced about 5 of my pawns, I started to take queens and rooks and knights and bishops. Essentially, I got the board full of all my pieces, and he had 1 king. So I made sure that he has, first of all, no stalemate, and so he could move king only 1 space back and forth. So that's what he did, and I assembled all my pieces, and I had actually all tournaments participants. They were all watching this game. So finally, I checkmated him because I started to get bored, frankly. So sometimes you can have a lot of fun in chess.
Isn't it easy, Sasha? Isn't it easy to get a stalemate for a person in your position just by misplaying?
Everything is possible. Hasn't happened to me.
Okay, now I want to ask all of you who are buying individual stocks. When you buy an individual stock, you're buying it from someone who's selling it.
Oh, we've went through that many times.
Well, the thing is, there's other reasons for people to
You're
sell.
buying it also from somebody else. I mean,
But there's reasons for people to sell that may have nothing to do with the stock. For example, when these insider trades are sold, the person goes, "Well, I need some cash to buy a house." Or like Bill Gates, what he did, because it does affect the value of your stock when an insider sells, because it's a reportable event. What he did is entered into an agreement where he did automatic sales every month. So he reduced his portfolio from down to 2% of Microsoft. And he did it under the advice of Warren Buffett, who everybody says the greatest investors ever, is to take it and diversify, which is exactly what he did. If you backload his analysis, and you can do this if you want to, if he had kept Microsoft and not listened to Warren Buffett, he would have been our first trillionaire. Okay, and that's how fickle the market is. In other words,
and also don't forget his divorce. If it would,
okay, so he wouldn't. He'd be
he would be still
he did have $500 million. But if you do a backload analysis on what Bill Gates did, following the best investor ever, the GOAT, Warren Buffett, what he did was incorrect. In other words, and this is the problem with the market, he should have kept Microsoft stock. They brought a new management in. Okay. It exploded in value, and if he had done that, he'd have more money than he did doing the Warren Buffett strategy. It is what it is. Now, on the other hand, because you don't know what could happen, that may not have been the scenario. They may have kept Steve Ballmer, and the market could have been flat like it was in the early 2000s. It could have been bad. I also did check another trade I didn't do an investment was General Electric. Just checked it. I was toying around at 30 and 40 a share. And all the analysts were beating it down, so I didn't buy it because they had analysts saying, "Oh, it's horrible. It's going to be years before the GA."
I recommended it 4 years ago, General Electric, if you remember.
First rule in investing: don't listen to analysis by analysts. Okay, don't listen to these people. Follow them, but please don't listen to them. Because there are good chances they're going to be wrong. But you do have to look at them because they do influence the market. But to expect that they're all right, forget it. They're sick.
What was the name of that guy who was involved in some very inappropriate, with his girlfriend, very inappropriate sex activities and wound up in jail and he hung himself? You know who I'm talking about?
You mean Epstein? Epstein.
Now, Bill Gates was involved with Epstein.
But so he's on the list. I know they got neurotic about it, but that doesn't prove anything. In other words, the thing is, it didn't prove anything really happened, positive or negatively. So when they kept saying, "Oh, you got somebody's name on the list," who cares? You could have had your name on the list. What are you going to do about it, Milan? I mean, so I really discount that stuff. It's good theater. It's good for TV. Okay, but in terms of hardcore reality, nah.
Because of his involvement with Epstein, he and Buffett are not friends anymore.
Yeah.
In case you
didn't know it could, but I mean, I think this is the problem you have with the market investing. And then I had some clients. Now this goes back years ago that would never invest in the market. They thought the market was a horrible idea. And you know what they said? All your money should be in real estate all the time. Okay. And they had all their arguments why. And Well, the thing is, banks will lend you money on real estate. You don't need, you put in a little and you can control these properties, blah, 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 blah. And I had a lot of real estate at one time. What they don't tell you, it is a lot of work. In other words, it's not like, oh, I bought real estate, I'm sitting on my butt collecting a dividend. No, you buy real estate and you're working your butt off. But they never bring that in. But there are some of my clients would never invest in stocks because they got burnt once on a stock trade. They can't handle the fact you are going to lose some money sometime. They're going to make a investment sometime. Emotionally, they can't handle it. They can't just run off and go along. And they shouldn't be in stocks because they can't handle it. So, I got it.
Case Shiller, Shiller was a Nobel Prize winner, and he and Case Shiller maintain they track the prices of houses in 20 American cities. Some are up, some are down, but Case Shiller are keeping a track of that, and you easily look that up. And on average, investors in houses are not doing as well as investors in the stock market.
Hey, Milan, along those same lines, because I think I've told Sasha this before, my family does have some investments that are out there. One of our investments, the tariffs may actually play a role in, because I know that where you are, Milan, and where Sasha lives, which is Canada, is heavy in the timber market. And the property that we have has heavy amounts of timber and all along those lines. So if the tariff war continue, then we may wind up doing what Trump is talking about, which is making America great again, because we have some of the timber here in America that folks would need if they're building houses and all along those lines, and we can't get it from Canada if the tariff wars are going on. So we've actually got a significant amount of timber, because it's multiple plots that is owned by my mother and her three sisters. Well, actually, it's been passed to one generation, which is the generation that I'm part of, with one of the sisters that passed and everything. But there's definitely 4 generations that have a significant amount of timber that we can use during this tariff war, since we can't get it from Canada.
I want to tell you something. The easiest way for Trump to make America great again is to play golf and do nothing. Just golf. And America will be great again for sure. Now, with what he's doing, I have some doubts. Very serious.
I checked today to see the number of Republicans who oppose what Trump is doing. People within his own party who don't like what he's doing and are turning against him. Now, he will make every effort to stay in power forever. And it is the people within his organization, within the Republican Party, who will see to it that doesn't happen. So we can just hope that it happens sooner rather than later.
I think I told Mark yesterday a very interesting story on the show. When you want to get something, you have to offer something, okay? And you might as well get it. So the story is about, it's not documentary, it's a short movie, Italian-made, very clever movie. It starts with a beautiful villa in Switzerland. And there is a very expensive Ferrari, I think, sport car, stops near this villa, and a young, handsome Italian gentleman with a suitcase get out of the car and ring the bell of the villa. In a minute time, a beautiful lady opens for him and asks him, "How can I help you?" And he said, "Well, I have a little problem. Maybe you will be able to help me." "What's your problem?" "Okay, here is a suitcase. There is a $1 million US, and the movie is like 30 years old, so it's really a lot of money." And he says, there is a lot of trouble. I have to carry the suitcase and I have to worry about it. However, I have a proposition. If you will agree to have a friendly sex with me, I will give you all the suitcases, all the money in it. It's all yours. She was furious. "Who do you think I am? How can you talk to me like this?" And so on. It goes on. And he opens the suitcase. "Well, look, it's yours. If you refuse, well, okay, I'll try to find somebody else." So she's now a little bit friendlier. She says, "Well, I never do that. How could you dare to offer that to me?" However, sometimes I think I may have an exception for you. Okay, so they're going into the villa. They have so-called friendly sex. I don't know what's the difference between friendly sex and just normal sex or whatever it might be. And he gets out of the villa and he drives away. So here, he definitely offered her something in order to get something. Now, if Trump would make an offer to all Canadians that as a part of the Canada becoming a 51st state, he would allow all Canadians to exchange their Canadian dollars on a one-to-one basis to US dollars. And you will see some very interesting results out of it. Oh, by the way, the end of this movie is okay. He did it a couple more times with her, and then she said next time she said, "Okay, I won't be around. I have to go to the airport to meet my husband." He says, "That's okay. What time he's arriving and so on." So she's at the airport, and he's also coming to the airport, and they have a quickie at the toilet room. They're coming out. The private plane is landing, and of course, much older man, a short one, typical mafiosi. He's coming out of the plane. "Oh, I'm so glad to see you. How are you doing, my darling? Oh, nice." Carla, to see you as well. Oh, by the way, I'm so glad that he sent that all the money that I sent, that he gave it to you. So everything worked out. I'm very, very glad, or so on. They're both quiet, and that's the end of the movie. So I don't know if that's Trump have in mind to do to Canadians something like this, but at least he could try. But if you try to monetize 40 million people in Canada and they're getting 50% surplus on their money.
That's pretty attractive. I did see that the US dollar is beating down the Canadian dollar. However, in Europe, the where I'm at, the EU is actually ahead. As a matter of fact, the thing is, the dollar has slid again. But I transferred a huge amounts of money over to Europe when it was in the high. I don't think people can beat timing. It's really hard. It's hard to time, but you can't beat it. So we moved a ton of money over, anticipating there was going to be a slide. So we moved it on the high. Now it's down low. I think it's trading at 91 cents for a dollar. So if you give them a US dollar, they give you 91 cents, which sucks. Well, we were getting 97 cents. Well, that doesn't mean much, but when you multiply it by like $500,000 or $1 million, let me tell you, it's a lot of money to lose because you didn't make the trade on time or you didn't make the exchange on time. So we pushed a lot over here into Europe. We still have some in the US and also the UK because I'm looking to acquire properties in the UK. But right now the dollar's getting beat up and by the sterling pound and also getting beat up by the EU. So the only place I'm looking at now is to buy in Canada.
Exactly.
I'm sorry. So I'm going like, hey, I got a better exchange than the purchase. About the same. So we might be neighbors, Sasha.
Good. Since you are in Barcelona, yeah. I will be there at the beginning of June. Do you know good casinos in Barcelona?
No, I didn't even know they had that in June, the beginning of June.
Yeah.
Okay, I'm traveling. I'm going to be in North Carolina, Tampa, Florida, Salt Lake, New York, and then I'm coming back here. And then in the middle of June, I will be in Budapest. So I'm like traveling a little bit in June. So you might be here when I'm not here if you're here in early June.
Yeah. Yeah, that's okay.
Barcelona. But I don't know if there's any casinos. I'll look around and see if there are any. Remember, this is a very Catholic country and it's kind of conservative. So there's not much exciting thing here to do except eat tapas.
Well, believe it or not, they do have casinos, and some of them are.
They do? Right.
I'll check it on the internet. Yes, they do. Okay. Because in all my trip, I have a big trip coming up into Europe, and every city that I'm visiting has casinos. And so
really? Wow.
Wonderful.
Where are you going after Barcelona? Are you going to other cities?
No, Barcelona is my last stop in Europe, but I'm going to Warsaw, Krakow, Riga, Vienna, what is it? Prague,
Yeah.
Barcelona, and fly back to Toronto.
Are you not going to Monaco? Are you
Sorry?
going to Monaco? Are you going to Monaco?
Not this.
Monaco.
It's
You know,
Monaco's
people in,
overpriced.
people in Monaco pay no income taxes. People in Monaco
That's the reason it's overpriced.
expensive coming from the casinos, and people who live in Monaco are not allowed into the casino except to work there. Yeah, we should have more casinos under such
I've
arrangement.
been in Monaco a few times, and I played in Grand Casino. Yeah, but it's out of the way. It's just a little bit too much.
It's overpriced. Monaco's overpriced because it is a tax haven country, so people like to go there and not
But it's
pay
a
taxes.
fantastic place to visit.
Yeah, and, you know, it's kind of tiny. All those other ones, I will take tours because I don't speak the language,
Mhm.
so I'm looking at going there, but on tours, not anything else but that. So that's pretty cool. In the meantime, it's all dependent on how the stock does and also how the sterling does. Because I was going to buy another place in Scotland. I already got a place on there. I got to start transferring money over before the dollar collapses. Otherwise, I can't afford anything in Scotland. Because this is a serious problem, by the way. You know, you go like, hey, what happens if
And last year in Singapore opened 2 casinos, and if you are a Singapore resident, you have to pay a couple of $100 just to get through the door. If you're
casinos are a good business if you're the house.
Sorry?
Yeah.
Toronto.
In Milan, casinos are a good business if you're the house. How can you possibly lose money if you own a casino? There's only one way I know, and that's to call Donald Trump, and he'll tell you how you do it.
Trump found a way to lose it, but then again, Trump also found a way to have the popularity. Because I know we've got a coach at UNC that's part of this popularity as well. To have May-December relationships with Carol. Apparently, his press secretary is getting a lot of flack because her husband is close to my age. I think he's like in his late 50s, and they just had a baby because she's only in her late 20s. I think she's the youngest press secretary that's ever been there and everything. But this is a new trend out there where these young women are trying to find. Maybe it's not that new, because Sasha, even when you were in the chess world, there were probably a lot of young women that were out there trying to snag an older guy to take care of them in their later years and everything like that. Because definitely that seems to be what she has done and all in that space. But she's getting some flack from that because she's seen, she's been attacking the press, she's been attacking a lot of folks, but folks are giving her a hard time because they just had a youngster, I think a 2-year-old, like a couple of years ago. But I know he's like 58, I think 57 or 58.
I don't know. I never lost any game to a woman. The only thing, my wife beats me in blitz, and but we play for fun. And normally we have 5 minutes games, match say 10 games. So usually it's I could lose 6-4, maybe 5-5. Some it's very close fought matches, and sometimes on holidays, like for example in Aruba, we play around lunchtime. We play 3 matches, 10 games, and that's quite interesting. So anyway, I'm looking forward to this European trip, and we'll use airfares, except from Vienna to Prague, we will take a high-speed train. Because they're very inexpensive. Even if you travel in first class, so the ticket will cost you, say, 70 euros.
Will you be doing shows from the European theater when you're on that trip, or will we be running reruns during that time, or will you be able to do them from Barcelona and Prague and the different other places, or have you gotten that far, and is the trip coming up anytime? Well, you said June, so that's not that far away. That's only a few months away and everything.
I'll see the schedule. Obviously, I will not be able to do on traveling days, but on other days, yeah, I think it's quite possible.
Cool. That sounds good. Yeah.
Okay. Well, listen, we've covered a lot of grounds. I think my trades, what I describe, will inspire people to keep fighting, be in a game. And if you're accurate and if you're following the charts. This is what I'd like to tell you, that don't listen to analysts or anybody. It's all in the charts. Learn how to read charts. It's all there. You don't need anything else. And you can do quite well, especially if you do it in fund portfolio. You don't touch your core portfolio. And therefore, even if you lose all your fund portfolio, which it's a special talent required to do that, but a lot of talented people are out there. So if you do that, then at least learn something. I've a little bit more than 2 years ago, I've allocated 40,000 Canadian dollars to a fund portfolio. It grew to about $200,000, and I took out my original 40,000 out. So I'm playing now with the house money. I'm not going to experiment a lot. I'm going to do the strategy which proved to be successful. And you have to, though, adjust. If what I did with NVIDIA, I will not be able to do it in today's market. So I'm not doing that in today's market. I'm doing something else. Selling covered calls is still a very profitable thing to do.
Very proud, yeah.
So you stick to basics and be a little bit.
Sasha, and I know we're winding down and everything, but one of the things I was going to ask, and it kind of played back to what I asked earlier, because even I know you said that real estate can be a risky but a worthwhile thing for people to invest in, and even in the real estate market, and I think that Nick would even agree with this and everything, a lot of people were trying to add cost to what they were investing in, because a lot of people in real estate, even here in this apartment complex that I'm in and everything, they had energy efficient light bulbs that they made sure that everybody had, which meant that the cost went up because they were adding a cost factor to the apartment. So I just wonder, is that something that people need to be aware of? Because I know a lot of people, whether it was LED lights or Westinghouse or whatever, got very happy about houses being energy efficient, but then that rose the price of the houses up and everything. So what is your take on that? Because that's been a trend that I've seen for the last 4 or 5 years.
The trouble with real estate is it lacks liquidity. And the way to get into real estate, if that interests you, is to be into real estate investment trusts. That can be sold instantly and bought instantly. So owning individual houses, the roof leaks and the plumbing needs attention. I have a house like that, using it as an investment. It was a big mistake I made. So, the people who are paying the rent, they're paying for the mortgage, but the upkeep that it needs and the attention. I wish I had that money in the market, which I will one of these days, not too long from now. But real estate investment trusts are the place to be if you're interested in real estate.
Hey, Milan, I can tell you this really quickly, and Sasha, you'll get a kick out of this. It can also be dangerous real estate, as my parents and my mother and her sisters learned, because sometimes you are going to look out for your family, but the family doesn't always want to look out for you. Because I did have a cousin that inherited one of the houses that is family owned, but they didn't do a good job of upkeep in that house and everything. So that's why they don't live in that house anymore, because they were basically relieved of that house, and because they weren't maintaining it the way that it should have been and everything. So you're right. You got to be sure that you put in good tenants if you're going to have tenants at all. And they don't always have to be your family members, Sasha. Sometimes your family members can be your worst nemesis if they're not going to.
I'll tell you about real estate investing. I never discuss real estate investing, and I don't invest in real estate. A few times I did when I was younger, and I did quite well, but it doesn't attract me, actually. And I'll tell you a story. A friend of mine, she was a medical doctor. Unfortunately, she's deceased. She had a beautiful apartment around St. Clair and Yonge. It's a prime location in downtown Toronto. And she rented this apartment to a couple. And by the way, from former Yugoslavia, I don't remember exactly where from. Anyways, they were living in this apartment, and they paid the rent for a few months, and then they stopped paying rents, saying that it's a tough time, it's a job, he lost a job, he's trying to find a new job. So for 2 years, they were living there, and tenant laws were very protective in Toronto area, or probably in Ontario, very protective of tenants. So she sent them letters, and she got a lawyer, and so on. Long as she couldn't evict them out of the apartment, living rent-free. So essentially, her lawyer negotiated a deal, and he told her and he's already in arrears of $25,000. So he comes to her and say, okay, the deal is $18,000. She said, okay, when can I get this money? No. You have to pay them $18,000 in order for them to get out.
Wow.
The average Swiss has a greater income and a greater net worth than the average North American. The average Swiss does not own a house. Something to think about, isn't it? Yeah.
Same as in Germany, by the way, too. Most people are living in rent in the apartments.
Yeah.
Anyway, speaking about real estate investments, now after this story, I don't know if you want to buy an apartment and rent it out and then pay $18,000 for them to move out. That's a fantastic story. Anyway, have a good week of investing. Thank you very much for participating in today's show. All the best and see you next Wednesday, same place, same time. Bye-bye, everybody.
Bye-bye.